What if I told you the market just gave us a warning, and almost nobody is talking about it? Today, stocks looked calm on the surface. The S&P 500 closed slightly green. The Nasdaq was up modestly, nothing dramatic. But under the surface, after-hours weakness, tech fading, and the 10-year Treasury yield holding near 4.05%. This is not random. This is positioning. And tonight, we're breaking down what today's price action in SPY, QQQ, and Treasury yields could really mean for the next move.
Let's start with the numbers. SPY closed around $681.75, but slipped in after-hours trading towards $680.95. QQQ closed near $601.92, then dropped after hours to around 650 cents. Meanwhile, the 10-year Treasury yield, TNX, sits near 4.056%, essentially flat on the day. So what does that tell us? Stocks tried to hold gains. Tech initially showed resilience, but into the close and after hours, momentum faded. That usually signals one thing: hesitation. Now, here's where it gets interesting. Yields are not spiking. They're not crashing. They're stabilizing. When the 10-year yield holds above 4%, it creates a subtle pressure point for equities, especially high-valuation tech stocks. Why? Because higher yields mean higher discount rates, more competition from bonds, tighter financial conditions. And when QQQ starts fading while yields remain elevated, it often signals that investors are questioning how much upside is left in tech, at least short-term. This doesn't mean crash, but it does mean caution. Right now, markets are extremely headline-driven. Investors are watching inflation expectations, Federal Reserve commentary, economic resilience versus slowdown signals. The market has been pricing in a soft landing narrative. But when you see SPY barely holding gains, QQQ selling after hours, yields refusing to break lower, it suggests that traders are not fully confident. This looks like a market that wants clarity. And when markets hesitate near highs, volatility often follows. Technically speaking, SPY is hovering near key short-term support. QQQ is testing psychological levels around 600, and the 10-year yield holding above 4% keeps pressure on growth names. If yields break lower, that could fuel another tech rally. But if yields climb back toward 4.2% or higher, expect renewed selling pressure in QQQ first. Tech tends to move before the broader market, so QQQ will likely give us the early signal. Here's what matters now. Does SPY hold above today's range? Does QQQ reclaim strength or continue fading? Does the 10-year yield break decisively below 4% or bounce higher? Markets right now are not trending aggressively. They're coiling, and coiled markets eventually expand. The only question is, in which direction? So today may have looked quiet, but quiet markets at key levels are often the calm before the move. Watch yields, watch tech, and watch after-hours behavior. It's telling a story. If you found this breakdown useful, subscribe for daily market analysis. See you in the next update.